All right, guys, it's BA here with our webinar for the night. I appreciate everybody taking some time to tune in and take a look at what we have to offer. So let's see who we have here. All right, great. Clint got the book today. Thank you very much. That was very nice. I appreciate Shelly. Good to see you out there. Hadn't seen you in a while. Mike, the option seller out there as well. So, all right, guys, let's get started. Tonight's webinar is on option trading, and it's what I call the six-figure options gambit. So I'm going to take you through how we're going to move forward trading the market as it unfolds from where we currently are. Everybody that's been around me for the last few months knows that I'm really excited about the next 2 years. I believe that the market is going to be an exceptional trading market, something that's going to surprise everybody. This is something I've been waiting for since 2013. I think we're here. So what I want to do is put something together to show you what we can do. So without any further ado, let's get started. See if I can grab my little tool here. Yeah, there we go. All right, so hey, what is a gambit? Gambit's nothing more than a scheme. It's a plan, a tactic, a maneuver. So that's what I've dubbed our little option trading program for the next 2 years, the six-figure option gambit. And the objective is to try and take a $10,000 account to a six-figure account as quickly as possible. Why? Or why do we think we can do that? Well, it's simply because we want to take advantage of what I talked about earlier in the opening, and that is taking advantage of a once-in-a-lifetime market opportunity. So the purpose of this webinar tonight is to introduce you to a winning method, a method I've used for decades, a logical money management approach, and we are going to combine that with the perfect trading environment as soon as it unfolds for us. And when you have a good trading methodology and you marry that up with the perfect trading environment, that's when the magic happens. And you can have a very good trading method and get mediocre results. You have to wait for those market environments to go to your favor. And they last for a while when they roll around. So you got to be able to take advantage of it. You have to be able to recognize you're in an exceptional trading environment. And then you have to push your luck, because these perfect environments don't come around very frequently. It's like the position we're in right now. We've been playing VXX to the short side, heavily to the short side, since 2nd or 3rd of February, back when the VXX was, above 50, trading 50 to 55 bucks a share. That's where we got most of our shorts off at, a lot of our debit spreads. So you have to recognize when you're in that environment, then you have to have the kahunas to step up and take advantage of it. So that's what we hope unfolds for us as soon as we get out of this environment here and we ring the register and get a really nice payday on the VXX trade, and then move forward into the future. And this entire webinar tonight is to show you the small tweaks that I've made in our trading program to accommodate this new environment. It's not any different than what we've, for those of you that have been with me from the start, it's not any different from what we've been talking about. The concepts are the same, it's just some slight tweaks here and there, and that's what I want to go through tonight. All right, agenda. Hey, what do I really need to know if I'm going to do this? If I'm going to saddle up and do this with you, BA, what do I really need to know? Well, I'm going to tell you. It's not as much as you think. And is this really possible? Well, I'm going to introduce you to the model. The model is what I trade against whenever I'm trying to trade to get exceptional returns. I've used a model for all my life. I don't use it all the time, but when things ramp up, when I'm trying to do exceptionally well trading, we bring the model into play. So I'll show you the model. How do we do it? I'm going to take you through the method. What guides us? The three environments. What do? We're just strictly buying calls and puts. Some of you may want to do debit spreads. That's okay. But by and large, we're going to be buying calls and puts, predominantly calls, because we anticipate the market screaming higher over the next, who knows, going up maybe 2 years from now. Charts and indicators. I'm going to talk to you about tools of the trade. All right, here's what you need to know. If you just want to follow along with my trades, again, I'm not a registered investment advisor. Your results will not match mine. You will have losses, so will I. Your price entry will be different from my price entry. Our results will never be the same. However, if you want to just follow along with me, you can do so, and just these are the things you have to master just to follow along with me. Now, if you want to learn how to do this stuff, if you want to learn how to select trades and start to build your own program, I do several times a month. I run what I call How to Trade Like a Pro series, and I tackle different topics every time I do it. I repeat those as we go forward, so that over the course of 6 months, you should be in a position where buying calls and puts, trading in penny stocks should not confuse you. You should be very, very adept at it after 6 months. As long as you're in there pressing the buttons a lot, learning this stuff, you're fine. All right, so here's what you need to know. The first thing is you need to know how to use your platform. And guys, I can't really help you out a lot with that. Most trading platforms have the do-it-yourself study guides. You need to access those to get up on your trading platform as much as possible. I show a few tricks and tips here and there along the way. There's still things about the TOS platform I use that I find out, even after using this thing forever. So there's always some hidden gems in there, but hey, just get around there, open it up, click the buttons, make the trades, do this stuff in paper money, and get very, very proficient at your trading platform. That also goes for your mobile device. Trading on the mobile apps from Thinkorswim or whatever trading platform you're using, you're going to be placing a lot of trades like that, and it's easy to do with just straight buying calls and puts. It's not hard at all. You need to know how to buy long calls and long puts. Now, this is something I can help you with. I have several videos in the archive that sorry guys, I was just looking at something else. I have several videos in the archive that are tailored just to buying long calls and long puts. So I kind of take you through that right there and help you along. That is one of the areas I reinforce time and time again. All right, let's see how to navigate the options chain. I cover this as well, a lot of the videos I have, but this is something you need to be very, very proficient in. And, the duration cycles for the options that we trade in, it shouldn't be a shock. You should understand that there's weeklies, there's monthlies, and in some issues, there's quarterlies, quarterly option chains. You need to know how to recognize those, the difference between working trades 20 days from now versus 45 days from now. Those are just some of the basics. You can pick a lot of this stuff up very easy. I mean, how to navigate option chain and duration cycles. 15 minutes, you're probably good there. a couple of sessions of buying long calls, how to do this and select the calls and puts. Yeah, you might spend an hour on that, but you should be fairly proficient at understanding how to do it. You just need to press the buttons and really, really get proficient at it. Let's see here. The next thing is how to open and close option trades. So I talk about that at length in everything I do. We're basically buying. We're not selling any options here. So we're basically buying options, and you always want to buy as cheap as possible. So I cover that in some of my archives as well. Here's something that really trips a lot of folks up, and that's how to calculate profit targets and stop losses. You need to be proficient at that simply because that's how we take trades off. You know, the trades we put on in this program, sometimes they come off pretty quickly, and you need to know how to set your profit targets and your stop losses to get out of these. And what really trips people up is what numbers to look at to figure out how to calculate their profit targets. And finally, you absolutely must know what happens to options at expiration. If you take them into expiration and you're in the money, what happens? And you're long those options. What happens if you're out of the money? Which nothing happens. You just didn't make any money on the trade when that occurs. But you need to be comfortable with what happens to options at expiration. You know, I have a real funny story now. It wasn't funny at the time. It actually worked out good, where I woke up one Saturday going into option expiration and found out that I was a proud owner of over 29,000 shares of GDX when it was trading for like $33 a share. So I miscalculated my deltas. I missed a few zeros when I did some back of the envelope math about 10 minutes before expiration on Friday. So that was quite a scare. Worked out okay, but it could have been a catastrophe. So you have to know what happens. You have to make if you've got big positions, you need to know where your risks are and how you can hedge those off if you need to. All right. So for this webinar, we're not going to go into any of this stuff. These are just items that you need to know how to. You need to be very proficient at it in order to make the most out of this service, out of our option program, if you desire to do so. All right, guys, here it is. It's the model. All right, this is what I trade against. I have one for every type of trading I do. I have a couple of disciplines. I have one very short-term method. I call it Project 5110. I'm never trading against anybody. When I do this, I am trading against my model. I do the math. Based off of decades of trading and how I've been able to trade in the past, I come up with some basic numbers of what I think I can achieve. So this is the option GAMBIT model right here. This is kind of part one of the GAMBIT system. So I'm going to explain it to you a little bit, and then once we go through this, what I'll do is I'll switch over to the real Excel spreadsheet and just show you how I tweak this thing a little bit. So everything that's highlighted in yellow are fields, the only fields that you can type stuff into that will change the outputs. So if you want to change this to, if you've got 5,000 you want to start with, and you want to ratchet it down to 5% per trade capital allocation, you just change those inputs and pretty much changes everything else. I should have not highlighted that because that changes automatically there. I'll take that off when we get to the Excel spreadsheet. So this is the math model that shows that, hey, we have a fighting chance of taking a $10,000 account and running it up into a six-figure account. Now, how long? I've ran this out for 24 months. I think that's reasonable based off, again, the trades I've made, the percentages of wins that I get, which, in the long run on a directional system is probably somewhere in the 70% range. My little project 5110 right now is above 80%, and it's much harder to trade than these options are right here. So, but I've consistently gotten, 70% or better, a little better on directional trades. So how this works is in our program, our options program, the discipline that we're using is what I call the short-term triple-digit gain discipline. And that's where we go after short-term triple-digit gains in the options market. And we try to use the velocity of money and churn that as quickly as possible. So in that system there, we stand very good chance of catching trades where stocks only need to go up, depending on how much we pay for the options, as little as 3%, no more than 5%. That's how much the stock has to move for us to get a triple-digit gain in the options. So we stand a very, very high percentage probability of getting those triple-digit gains, especially in this environment that we're getting ready to roll into. So for the GAMBIT model here, I'm factoring in no more than 8 trades per month. We will probably have more, but that's just on this model right here. So that's why I kept this at 8% of your capital. So that's, $6,400 is what I've got factored in right here with enough capital to surge, maybe 3 more trades if you wanted to. This is just simply a factor of this right here. This doesn't really come into play. It's the 8 trades per month. We're going to risk 8% of our capital on every trade. I'm thinking that after 1,000 trades, after wins, losses, expenses, I'm thinking I can make 15% per trade. That's what the average will be. Now, let me back up and make sure you understand this. I'm a firm believer in the law of large numbers. I love getting out there and throwing the trades out when my model, using my method, so that I can get to really after about 50 to 100 trades, you've got a very good run of numbers right there. You can tell what you're going to get. This model right here is kind of like if you've ever gone to a bodybuilding gym where you've got the coaches that are, or any athlete, any top line athlete, they put athletes on very strict regimented nutrition plans. And 4 to 6 weeks is what they typically will give these athletes time for that meal plan to work and to get the results that they want. There's no difference with this model right here. I'm trading against this model. I want to beat this model. After a run of 25 to 50 trades, I am looking at my average P&L per trade. That's what I'm really looking for. I'm making sure that my cumulative profit and my potential profit, my monthly profit, is in line. Really, the key factor is this number right here, my average P&L per trade. Everything else works out. It's this number right here. This is no different than the fitness coach when he takes his athlete in, and whether he achieves the goal they wanted to get to, whether it was cutting down body fat, gaining muscle, running 0.3 of a second faster, whatever that is. If he does not get the desired results, he starts tweaking the meal plan again, changing up other little things, just very, very, very minute changes. That's what I do here when I'm trading against my model. I'm making very, very slight changes to my entry techniques, to very sensitive to the environment we're trading in. Maybe I've misjudged the environment just a little bit. When you get to this level of trading, you're trying to, you're analyzing not just the market, but you're analyzing everything that you do, all the inputs you take, and you're trying to make those trades in order to try to beat this per trade average. That's all I'm trying to do. I want to beat that. I want to stay ahead of that right there. If I stay ahead of this, then this over here will take care of itself. And as long as I have the capital, I will take as many trades as I can get my hands on. I'll keep plowing that money back in as many times as I can. The money management aspect of this is how people achieve phenomenal returns. And don't think it cannot be done. Don't think you can't do it. Anybody can do it. Trust me, anybody can take these basic approaches, a good method in a really good market environment, and look like a superstar. That's what we want to do, look like superstars. So this is how this setup with $10,000 looks. 8% per trade, capital allocated, which comes out to about $800. You're never going to get exactly $800 in your trade. You're going to get close to that. You know, $700. You might get $699. You might get $875. But this is just the math model. I want to stay above 15% P&L per trade. So let's look at the monthly returns. So again, this is linear. This is very, very linear. This is not how it will unfold, but this just gives you an idea how it works. So you start out, potentially make $960 a month on a $10,000. So that's you'll look over here, and the money management algorithm keeps you just under 10% per month. All right, so how that works out, month 24, now you're up to like $7,900 a month, potential to do that. All right, I'm saying that there's a possibility of getting to this, to these numbers right here prior to 24 months. It could take 4 years, but if you stay with it, you're working a day job and you're doing this just, while you work, hey, in 4 years time, I mean, if I'm lousy at this and take 10,000 and get you to six figures in 4 years, that's not too bad either. All right, so here's the cumulative profit. So we start out, of course, made $960, so that's the first month's cumulative profit. We go all the way down. You guys can take a look at it. So 80,000 cumulative profit, total account value somewhere on 90 grand, 802% return. So again, guys, this is just a model, something to trade against. Again, I have used models like this my entire trading life. Just something to keep me grounded. I have to have something to trade against. It's like everybody needs an enemy. You got to have an enemy. You got to have something you're working against to really rise above the occasion. I like trading against the model. I've heard people say that they become a lot better whenever they see people, especially like us in the military, when they see people falling out, ruck marches, runs. They say they get stronger whenever they see that. It's no different. I mean, we have to have something that grounds us, that drives us, that a way to get the energy flowing. For me, it's the models here. Now I'm going to pull up. The. Let me see here if I can find it. The Excel spreadsheet. And let me see. Why will it not pull that up? I may not have. Guys, I may not have pulled that up right there. Anyway, all right. So you've. Yeah, I was just going to pull this up and adjust the numbers there. All right, guys, hold on just a second. Let's see here what we've got. All right. So let me back up, make sure I didn't skip anything. Hey, if anybody has any questions or anything, you can, you can just hit me. I'll try and catch it. I'm watching out of the corner of my eye to see here. But if not, we're going to drive forward. All right, next slide. Okay, so this is the profit and loss graph that I showed you on the Excel spreadsheet. Now, again, this is a linear rise. There are no bumps whatsoever. You will never, ever see an equity curve like this for monthly profit and loss. Okay, it's more than likely going to be something like this. This isn't bad either, guys. I mean, there's some huge, drawdowns, but if you can keep your trades, keep that mean right there in the middle, I mean, you're still going to get to it. This is what most equity curves look like. What my objective is, let me clear this, is what I want to do is I want to keep north of that line right there. I want to hit a couple of big ones, give myself some buffers. You might be saying, hey, why do you think you can stay north of that line right there? What makes you think you can even beat your model and stay north of that? I can only tell you what we've done since we started the service. I don't have the sheet in front of me here, but I mean, we've gotten in Red Hat, we scored a 900% return. We've gotten 333% in IBM. Another trade in IBM, 150%. We got 355% in DPW. Another trade in DPW over 100%. I think 125 or so. CEI was up 140 some percent. APEI, another 150% gainer. Netflix, unfortunately, 427%. I left 1,000% on the table on that one right there by getting out. Nabbed it, actually undershot how Netflix was going to trade this year. It went up to above my target in less than 3 months. I closed out. Yeah, we could have had probably a 14 or 1,500% gain in Netflix, but I chumped out on that one at 427. That's probably about 70% of the triple digit winners we've had so far. So I didn't even cover the penny stocks that we have. Those are just option trades. So I'm hoping to keep above this right here. I think I can. We can, once we get out of this high volatility environment we're in right now. So, but anyway, that's my intention. That's what I want to do. I want to stay north of the equity curve. It's going to jump around, guys. My equity curve has never been that smooth. It's always jumped around like that. Anybody that tells you they've got a smooth equity curve like that right there are the biggest liars you'll ever see in your life. So I have never, ever gotten anything remotely close to this right here. Even when I was back selling options, gunning for triple digit gains in large portfolios every year, I would always have 50% drawdowns before I could double my money. I mean, I don't know if that was just my luck or just the way it was. So, but anyway, let's move on. Let me clear these drawings here. All right, again, this is just a cumulative P&L, over two years, a linear fashion. It's not going to unfold like that. Again, you guys know I want to keep north of that line there. All right, let's get to the method. The method involves stock selection, a setup, the entry, how to take profits, and taking losses. That is essentially it. It's not there aren't any more steps. It's not any harder than that. You don't have to have an Ivy League degree hanging on your wall to certify you to be able to pick winners in the market or to do very well. I actually have a GED equivalent, so I'm pretty happy with the fact that you can operate in the market as long as you understand a couple of concepts, and that's what we're going to talk about from this point forward. Stock selection. Okay, what I plan to do, the stocks I will look at are some of my old reliables. Of course, the stocks in the Dow Jones Industrial Average. I always look at the dividend aristocrats. I'm particularly cued in to the dogs of the Dow. I really want to play those. GE's been a thorn in my side. That one has languished longer than any dog of the Dow I think I've ever seen. So, that's how we got trades in last year on IBM. It was a dog. We had multiple triple digits on IBM last year. I have my focus list of stocks, indexes, and futures markets where I like to play options. We have that. And then, of course, you guys, if you're reading the weekly perspective, I also look at which sectors are leading, and we try to zero in on those. So this is the stock selection piece right there. Our trade setup. Okay, guys, what a trade setup is, once you have stocks that you can sift through, and you don't need that many, you really don't. If you've got 35 to 50 stocks you like to go through, that's a lot, especially if you're starting out. But once you have your stock selection mode down, the next thing is what am I looking for? Well, I keep it very, very simple, and I try to specialize. So that's the key to everything here, is specializing. Well, guys, what I'm showing you here is a way. It's not the way. It's just my way. So there's 1,000 or 10,000 other ways out there. This is just the way I like to put context around the market and identify stocks that have a high probability of moving within the next 3 days. And that's crucial. Concept 1 on daily charts. This is a strategy I've used for probably 30 years. It always works over the long term. I looked for it. I could never find it because I've had so many hard drives wiped. But I used to have stats on the first pullback in a trend. That's what this method is, guys. It's a pullback into a trend. I'm going to show you. I'm just explaining it to you now. But the stats on that were staggering. And if I remember correctly, it was 91 or 92% chance of the market being higher 3 days after this trade setup would fire on the first setup in the trend. 3 days after the trade would fire, 91, 92% of the time the stock would be higher. And I forget what the percentage the stock was higher. I don't know if it was 2, 3, or 5. I ran several different runs on that, but I wish I could find that. I know I had more than 3,000 observances. But the more times you get this set up in a trend, the less effective it is. Until you get into a market like I believe we're getting ready to enter. So when we get into this market, if it pans out, if it unfolds the way I think it will, we'll play concept 1 on daily charts inside the trend until they just stop working. So that's the plan. I'm going to go into this at length with you in just a moment. All right, the second trade setup I'm looking for is contrasting color bars. So guys, I have my trend indicators color-coded so that my bars are either green for a bull market or red for a bear market. It makes it really easy for me, even after 35 years or more doing this, seeing green bars in an uptrend, red bars in a downtrend. It just really, really works for me. So what I like to do to identify, again, markets that are about ready to move higher, I look for stocks that are in an uptrend, have green daily bars, and have 15-minute bars that are red. So I'm able to look at that very easily. I have this color-coded on my watch list, so I can pull up hundreds of stocks and scan with my eyes in the matter of seconds on what I need to see. So I can cut to the chase very quickly on these things right here. So that's one of the things I like to look at too. Again, I'm going to show you this, so it'll make more sense to you in just a minute. And then on a 1 hour chart, I like to see a stock pull back at least 2 standard deviations or more from its 50-period moving average. So those are the setups I'm going to focus on to identify the trades in the stocks that are in my inside of all my watch list. Those are the setups. Now, once we get through the setups, we need to talk about the entries. But first, here's some graphics on the setup, just so you can understand what I'm seeing. All right, guys, look here. It's Amazon. This is a daily chart. Amazon on top. Amazon on the bottom. This is a 15-minute chart. All right, you see here it starts back. It's red here. We get green. Amazon stays green from the 30th of October last year all the way up until, well, I made this chart last night. So it was green the entire time. What I want to show you is this is the most recent Concept 1 trade setup. All right, we have green bars. It never changes. I use an oscillator. This is called the CCI. It's a 3-period CCI. When the oscillator, what I call, slaps the floor at -100, it sets the trade up. What I'm looking for is an entry off of that. I think within 3 days, the stock price is going to be higher after this fires. Sure enough, you can see it's higher. It goes up considerably. You would have made a lot of money on a call purchase or a debit spread in that trade right there. All right, so what this little shaded area represents right here is this area on the 15-minute chart. That's what I want you to look at. This is what the daily chart looks at. The intraday chart, or the 15-minute chart, is kind of like an X-ray. It allows you to see inside the market action. So this area right here, this rectangle, is actually this rectangle right here. I didn't draw 2 rectangles. You draw this on the 15-minute chart, and it shows up on the daily chart, per its dimensions. So what this represents is this is the moment when the CCI slapped the floor on the daily bars. So you can see it's red here on the 15-minute. What I'm looking for is I'm looking for this market to probe low, move up, come back down. When it ratchets back up again and takes this high out, I'm going to assume the market's going to go higher because it had a chance to come back down and take this low out, and they could not push it down there. That's what I call entry technique 2. All right, so again, makes a low. We had trade setup 1. So now we switch to the 15-minute chart. We go down. We're looking at looking for it to make a low. It makes a low. Then we're looking for the bars to turn green. They do. We're looking for a pullback. We get it. It comes back up. It takes this bar, this high out right here. We get in wherever we can. Maybe we get in here. Maybe we're working. We miss this. We're like, hey, tomorrow I want to get in. Maybe you get in at a better price there. Maybe you don't. Maybe you're scared right there because it looks like it's going back down. But then when it ratchets up, you get in here. Hey, I'm just going through all the things that run through your mind as a trader. So, but this gives you the go-ahead to get in right there. And then, of course, it just keeps going higher. So, so this is Concept 1. Green bars, CCI slaps the floor. We switch to a 15-minute chart. When the low's made green, we move up. We come back down, probe. We don't take this low out. We go higher. We take this out. We get long. That's it. It's not any harder than that. Okay, trade setup number 2. Contrasting colors daily to 15-minute. So what I've done here is this is maximum position we currently have, or a stock we have a position in right now. So this rectangle right here indicates the bars are green, and we have red bars on the 15-minute time frame. Not much difference than the Concept 1. The reason I have this is because strong stocks a lot of time will pull back and they will not trigger a CCI pullback deep enough to pull to let that CCI slap the floor. Strong sectors that are leading the market, we will not get concept one setups. We'll get these setups here, the contrasting colors. We'll get green bars here. We'll get red. We'll get the market. It'll probe below. It moves up, comes back down. We get green bars here, but it doesn't qualify because it never took this high out. So we come back down here. We get green. So you're clear to enter this thing anywhere above this area right here. That's it, guys. There's no, well, I should have gotten in this bar. No, it really doesn't matter. You're trying to identify an area to buy your calls in. That is all you're trying to do. You're not going to pinpoint entries on anything. Don't even try that. You'll worry yourself to death. There's trading methods where you can do that. I do that on a very, very fast time frame, but this is not the type of trading where you pinpoint your entries. You identify an area. You use these setups, use this entry technique to get into these trades. All right, that's trade setup number 2. Trade setup number 3 is the 2 standard deviation dip on 1-hour charts. That sounds like it's really complicated. Honestly, it'll make you sound a lot smarter than I actually am. All it does, it just measures, it gives me a very, very quantitative distance that the price has moved away from the 50-period moving average. So what I've done is I've had somebody build an indicator for me that identifies the 2 standard deviation move. So this white line represents 50-period moving average. This blue line is price. Anytime price is below the white line, it's below the 50-period moving average. When it's above it, it's above the 50-period. When the blue line gets either below or above the red lines, it's gone more than 2 standard deviations away from the 50-period moving average. I don't know if anybody studied statistics, but in trading, that's fairly significant. I like to bet that we're going to get a reversion to the mean. That's all this is right here. You can see Weight Watchers. This is a 1-hour chart. You can see right here, this area I have marked out. This is where the price drops below the red line. We get, so it's definitely well below 50-period moving average. That's the setup. Now, as soon as I see this get alerted, all I do is I put Weight Watchers into a watch list for me. So I have a separate watch list of 2 standard deviation dips, and I watch those. That's one of the things I look at, for trade setups. So what we're looking for here is, guess what, guys? The old entry technique number 2. So we make a low here, we roll up, we come back down. We're still red right here, but the market never ever comes back down low enough to take this out. Instead, it turns green. The minute you take out that high right there, you're clear to go ahead and buy some calls in there. Again, guys, 3% to 5%, depending on the price of the options, and you will get your 100% move. You probably would have gotten 70 to 80% in this move right here had you entered in this area. That's all you would have needed to ratchet up a 70% return. So on that one trade. Anyway, that is trade setup number 3. Before I move on, anybody have any questions? You just type those in into the little Q&A box there. If you have any questions about the trade setups, that is as hard as it gets. All right, I don't see any typing, so let's move on to the next. Entry technique 2, guys, we've already talked about it. Here's one final look at it just to cement this in as firm as I can. Again, I really, really rely on the paint bars. The paint bars are, I do have them for sale in my in the members area. It's I had a guy program it for me. Not only did he program the paint bars, but he also built up my market watch list so that my columns are color coded to match the paint bars in this thing as well. So they're only $37. I have to sell a lot of these to even get close to what it costs me to have it coded. But if you're interested, just let me know, and we'll get you hooked up. It's only good for the Thinkorswim platform. I don't have them color coded for any other trading platform out there. But it just makes it really easier to see. But you do not need to have the paint bars in order to see any of these setups here, guys. So other than the contrasting color code, you can see here entry technique 2. What we've done here is I've identified concept 1 trade. So you can see here, market goes up, comes back down. This is Corning, GLW on the daily chart. This is a 15-minute chart. So this is the area I'm looking at. You see that white line right here where my red pointer is? That's this white line right here. All right, so we get a pullback. It's actually concept 1. You see where it slaps the floor. We still have a green bar, so now we're on watch. We got this baby in our crosshairs. All we're looking for now is a rally. We get it. It comes up and pulls back. It doesn't even break this low right here before it rallies again. So I put my bar, my horizontal line right above that swing high. Anytime it moves above that, above this area right here, you're clear to make the trade. Maybe you're working, you don't see it this day. You come in the next day, you put your trade in, and you get filled somewhere after the open. And you more than take your profits out of this trade right here. So you can see it just keeps going up 34. It runs up to 35 and some change. Yeah, you got your 100%er out of that one right probably at the top. So anyway, we're using the concept 1 trade on the daily. Got the trade set up. Stock rallies off of this low. You got to have the most recent low on the 15-minute bar before it's this is a perfect example here. It makes a low here. It rallies up. You're like, oh, yeah, this is probably good. This is it. And then all of a sudden it tanks. It takes that low out, so you start over. So now it makes a new low. Now it rallies up, changes colors. It doesn't pull back there. It doesn't count. It comes up, get a little pullback, rallies up, takes that swing high out, clear to buy anywhere in this area right here. We're just trying to buy into an area. That's all, guys. Profit taking. Hey, once we get into the swing of this, we're going to manage these very, very closely, only because we're swinging a lot more money, or I'm swinging a lot more money per trade every time I'm up to bat. So, if you guys ever see my the trading tops and bottoms, your closed out trade results, you'll see I've got probably 7 or 8 option trades where I lost 100% of those. Well, the reason I let them go to 100%, they didn't work, but I had less than 0.5% of my capital in those trades. So they either work or they don't. I don't even worry about those. But these trades we will not let go to 100% loss. There's no reason to. We're going to take profits half off at 100%. We're going to take the rest off when it violates this blue line, the 30-period simple moving average. We'll talk about these indicators here shortly. So that's what we're talking about here. Half profit off at 100%, somewhere in this area. You take the other half off when it closes below this 30-period moving average, which I'm calling support and resistance for our trade setups. And I have ovals here showing you where this trade closed there. You can also see these are the 15-minute bars telling you that it's done. It's done at this point. So you want to get out of that trade. You made a profit on both sides. That was a good trade. Move on to the next one. All right, that's how we handle profit taking. Again, what you have to really work on, especially if you're new at this, is to figure out what prices you factor in to determine what your profit target is. It throws people all the time, but again, I cover that in a lot of my videos in my archive. Taking the loss, breaking out the old crying towel. Hey, it happens all the time. Trading, what we're trading here is we are going to close the trade out anytime we reach a 50% loss on the purchase of the option. So if you buy the option for $2, which is $200 per contract, you're going to take it off if it gets to $100 per contract or $1 per option. So that's what you're going to do in that. It's the first place to take it out. You're also going to close the trade out anytime it breaks below the 1 hour 30 period moving average. And again, we'll talk about these indicators here in just a bit. All right, we're moving to another lesson here. Any questions about what we just talked about there? Entry technique 2, taking profits or taking losses. All right, I don't see any hands popping up. So let's see here. All right, guys, one of the most important things for me, other than the money management scheme of this, is the trading environments. Being able to identify what kind of trading environment we're in, because that's where I put the context around our trades. That's where I bolt on the type of money management we're using. That's what tells me how much I should play, whether I should be playing nothing but volatility products, or whether I should be doing nothing but short-term triple-digit gain type trades. So I'm going to walk you through this process here just so you can understand kind of how I look at the market environment. So there are 3 trading environments for me. Now, this is my own concoction. I concoct a lot of things. This is one of them. All right, the market for me allows – the 3 environments allow me to place context around the market. What you're going to see is as you trade more and more, the markets spend more than 85% of their time in what I call chip shot territory. I'm going to move. This is the actual market environment matrix I have. It's low volatility, high volatility, exceptional opportunity. I have them labeled chip shots, trading the dream, and fantasy land. So the market spends most of its time here in chip shot range. When we get over here, this is what happened in February, early February. This was fantasy land. This is what I love, this type of environment here. Trading dream is a transitory environment where chip shots go there. Sometimes if it gets worse, the market gets worse, then they zoom over to fantasy land. If it's just a really small pullback, then they hit trading dream, they get to this edge, and then they revert back to chip shot. But when you bound to trading dream and then go right to fantasy land, that's when you know exactly what you have to do. I have my jobs down here at the bottom on what I'm supposed to do. Now that you've seen this, I'm going to go back and then we'll revisit this in a second. All right, number 3. As markets transition from chip shot to trading the dream, you need to start concentrating on vol products. If a market gets into the fantasy land, this is where you make the big play. It's what I call title territory. You don't get these pitched to you very often, and when you do, you got to step up if you're a trader and take advantage of it. You do not get thrown these plays that often, and these are opportunities to make a year's worth of profits or 2 years worth of profits in 2 to 4 months. Most of the time it's under 2 months. We just happen to be in one right now that seems to be lingering forever. But the thing to remember is that markets never stay in fantasy land, which is at the far right side of the there's fantasy land where the VIX is greater than 25. It never stays in fantasy land. It always reverts back to chip shot mode. It has to. The historical norm for the S&P 500 is somewhere around 15 for the implied volatility. The market will always stay under 15 far more than it stays above it. So that's just something to take away from this. As the market transitions from fantasy land back to chip shot, make your final plays during the transition through trading dream environment. So let's take a look at that. So here's the way it progresses. We're in low volatility. In this environment here, this is where I'm putting on retirement account protection trades. This is where I'm trying to insure my retirement accounts, because at some point we're going to have a huge pullback. And this is the environment where we get to buy cheap out of the money options 6 months, 9 months out to insure our portfolio. So when it does happen, we get paid for it, right? So as we're in here, we're trading chip shots. We're doing short-term triple-digit gain trades. We're putting on a few long-term speculative plays. Then we move to trading dream. We get a pullback. Now things get active. In this area, this is where I'll start taking this retirement account protection trade off. We may cease trading in short-term triple-digit gains altogether during this, because now we're starting to focus on volatility products. We may put a few long-term speculative plays on here just because we don't know if it's going to be a shallow pullback or a big one. So we don't commit all of our capital right here. The minute we bolt into this area, now we've got something to work with. Now it's when we ratchet up. And I have several what I call sectors that I look at once we get into this area right here. And when we get into what I call the all-in sector, it's not all the chips on the table, but for me, it's probably 65% of my capital pushed in on volatility, shorting volatility products. So that's what we want to do here. My job here is to make a large bet that volatility will collapse and make bullish plays on stock that I think will be higher 6 months to a year out. That's my job in this area right here. As it transitions here, I don't know how long it will stay in this area, but during this phase, I continue to add to my position that I initiated back in Fantasyland. So while I'm in here, I'm chipping away. I'm adding more to this position I put here because I think it still has plenty of room to run down the chip shot. When it does, and it always will, it will go into chip shot mode. That's when volatility absolutely collapses and we get our payday. My job here then moves from cashing in from big paycheck to moving on to short-term triple-digit gain setups. That's how the market environment works in my world. Any questions on the market environment before we move on to buying puts and calls? Calls and puts. Okay, no hands. All right, guys. Expiration cycles. These are the small tweaks that I'm making to our existing program. So expiration cycles, I'm generally going to choose 20 to 30 days to expiration for our call and put purchases, somewhere in that vicinity. Strike prices. I'm going to leave this up to you if you decide to follow me. I will email you every time I take a position. We're going to move our strike prices and make it easy. We're either going to buy one strike in the money, at the money, or one strike out of the money options. Again, this is all because of the environment we're in. Guys, when we ratchet out, we're right here right now. When we move out of this into chip shots, the stock market is going to explode higher. One strike out of the money. These may help you guys with your $10,000 accounts. These could actually help you. One strike out or at the money may be cheaper for you. Let you get fine-tune your purchasing better, get closer to that 8% per trade. And but that's the range of strike prices we're going to do. One strike in the money to one strike out of the money. There's really no wrong. there's no wrong answers inside inside this range here. Short-term trades like this do not go any further than one strike out of the money. That's wrong. If you want to go further than one strike out of the money, buy yourself some more duration. Go out. If I go 2 strikes out of the money, I always go at least 60 days. That's just me, though. But I feel pretty confident on the market environment we're in that we can trade in this range right here, up to 30 days without any issue. I don't want to go any shorter than 20. I'll have to have a very good reason if I do. Order entry, just a reminder, buy as cheap as you can, because we are what we're doing right now is we're buy. We're buying calls, we're buying puts. We're not selling to open anything. Other than if you have a large amount of capital and you happen to stumble into a position like we're in right now where I'm selling VXX short. That's the only difference in what we're doing here. So, but we're buying calls, we're buying puts. So you always want to be lower. Try to get it as lower than the mid price. And if you need to get in, then you just get in at the mid, but never pay up for it at the natural. I mean, they'll trade with you all day long at the natural price because they're picking your pockets. All right, let's talk about some of the tools of the trade here. So we're about an hour in, and I'll speed this up, and then I'll just take you through a couple of charts. We're almost finished. All right, so first thing I want to talk about is charts, aggregation periods. What I've done here, this is a chart setup that I use when I'm doing my analysis at night, Thinkorswim. If you want to set this up in Thinkorswim, you have to go over to the flexible grid portion of the chart section, and then you just fumble around with it till you get a setup like this. But I have the daily chart on my left, I have the 1 hour up here, and I have the 15-minute right there. Those are the 3 charts that I will look at for the next 2 to 4 years trading in this environment right here. Daily chart, 1 hour chart, 15-minute chart with all of my indicators up on this thing. Tools of the trade, indicators. Okay, what I use, and I'm going to show you on live charts in a minute. For the trend, I use the MACD paint bars. Set those, again, you can set the MACD up. Don't use the default, change the default settings to 24, 52, and 9. But I have them on paint bars, so whenever the MACD is bullish, the paint bars turn green. Whenever it's bearish, they turn red. This works in all time frames. Pick a time frame, works on it. You can use the 1330 period simple moving average. Works in all time frames. I'll show you how I use that in just a minute. That's 13 period moving average and a 30 period moving average. The oscillator that I showed you for concept 1 is the CCI, and I should have put in there 3 period CCI oscillator. That's what I use to get the slapping on the floor. So that's the only oscillator I use. Measuring extreme moves, I mentioned that I had somebody program a standard deviation indicator for me. So that's what I use for that. Support and resistance, I use 200 period simple moving average on all time frames. All right, so let's go back here, and I'm going to walk you through a couple of charts. See if we get our Thinkorswim platform up here. All right, there we go. All right, let me expand this out a little bit. Okay, so let's go to, let's just walk through some charts. All right, so I've got the dividend aristocrats up right now. Let's see if we find, okay, we got some green, red. Let's take a look at TRO here. We've got bullish on the trend, daily trend, red here on the 15-minute bars. can actually look at MKC because that one's slapping the floor right now. So let's do that. This is the CCI indicator. This is how I can just look at them. So we're bullish here. Got CCI slapping the floor, and we're also red on the 15 minutes. Let's take a look at MKC. All right. Nice. So what we have here is we've got a nice pullback in McCormick and Company. So the daily CCI is slapping the floor. It's not up here, but it's on my Market Watch tab, so I don't need to see it here again. All right, we've got red bars here. So there's really nothing to do here on MKC. No action tomorrow, but what we'll do is I'll put MKC in my watch list. If this market really starts to move, this thing will play out over the course of the next. It's going to take about a day and a half or 2 days for this thing to materialize. So here on the 15-minute, we've made a low. Now I'm waiting for this thing to rally up, and then I want to see it come back down and then go back up again. I don't want to see it take out that low. Once it does that, I'm going to turn my attention to the 1 hour charts. And as long as I get green, get an entry, and I see an uptrend on the 1 hour charts here, I'm going to enter that thing. So that's kind of how I look at that. Let's look at one that I've actually got on my watch list and see how it's holding up. Universal Display Corporation. So we have something that possibly could be coming off of the bottom. So we see on the daily time frame, we have the low here. We made a rally up, we come back down. If this low here doesn't take this out, I'll get some indications on my intraday time frames. So now I just switch over to my 15-minute, and again, we see a low has been made here. So it's the same pattern, guys. It doesn't ever change. I'm waiting for this rally to finish. Come back down. I like to see some green. Come back down and then stop before it takes this low out, and then move back up again. You know, once I get green and once I take out this swing high that it forms here, as long as we get bullish and get some first green candle on the hourly, we're buying that call. That's as hard as it gets. I don't want to make it any harder. So this is not a concept 1, but this is using entry technique 2 on a daily time frame. This is kind of the cornerstone of my top and bottom trading that I do. So it works out in all time frames. And when I see this thrust up, move back down, if this thing stabilizes and keeps moving higher, we have got a really, really good long trade candidate right here. That's why I've got it on my watch list, so we can try and take a stab at it whenever it rolls on. Guys, that's all I wanted to show you. Let me see if I had anything else. Oh my gosh, I lost my, what did I do with it? Scroll through this guy, see if I think I had one more page. Yeah, there we go. All right, just to summarize what we've covered here. I think we're going to enter a period that's going to surprise everybody. Like I've mentioned before, hundreds of times before, been waiting for this for 4 years, almost 5 years now. So I want to take advantage of it. I want other people to take advantage of this too. We may never see another market like this. We have an opportunity to do very well going forward next 2 to 4 years. So I want to take advantage of this market environment. I want to be able to help make you consistently profitable. I want to teach you a successful approach. You could just follow my trades if you wanted to, but it's much better if you, once you get the feel of it and you see how I do it, that you make this your own. Everybody, nobody trades well following somebody else. They might turn the corner and become very consistent and profitable, but they really never really do well until they start building trades on their own. And as long as you understand the concepts that I show you, they work on everything. So, and I have very simple concepts. 6 months and you're a pro. You know everything I know inside of 6 months to trade options. And you could hold your ground with anybody. So, hey guys, if you have any questions, you can go to the website. Got more information there. All of the archive videos, though, are in the members area site for all of the subscribers. So I don't have anything yet that's out that's free and available. If you want to contact me personally, there's the email address for that. Hey, other than that, guys, I appreciate everybody showing up and entertaining me for the last hour and 10 minutes, 10 minutes over. So I will archive this so that, and it'll probably be available tomorrow evening, I would say, on the website. I'll try to put it out in the open somewhere too. I don't have a site yet for that, but all the members will have access to it definitely tomorrow. So guys, if you want to kick the tires, just jump on the website, sign up, subscribe, and you know, if you don't like it, not for you, hey, just drop me a line. We'll part as friends. No issues, no harm, no foul, no bad feelings. So, but anyway, thanks again for showing up. Anybody has any questions, I'll leave this open for a few minutes and I'll answer any question you have. Other than that, you guys have a nice evening and a great trading night. Jeff, you're very welcome. Oh, you're welcome, Clint. No issue. Hey, yeah, thanks for the book. I know I said that earlier. I love all of Jesse Livermore's books. Yeah, I just got that today, so thank you. It was really nice. Appreciate it. Yes, I will. I will send everybody that signed up for the everybody that signed up for this tonight. If you want the spreadsheet, I will send that out to you. It's in Excel, so and that way you can manipulate it. I know if Mike is still on here, he's an Excel master too, so he probably already crafted one up while he was watching that, or he probably has a better one. Mike, send me one if you have a better one. All right, guys, no more questions. I appreciate it. Yeah, I appreciate you guys tuning in. So this is BA signing off. Oh, sorry. Hey, yeah, I just scrolled down and saw there were some more questions. Hey, that RKDA trade, yeah, I don't know, man. I don't know where that came from, Clint. That was crazy. And you know what really makes me mad is I bought that stock as a penny stock a couple of months ago and took it off at what I call a nice profit. It would have been a well of a profit tonight. So I don't know what happened to that thing. I still haven't read the news. Shelly, thanks. Appreciate you joining up. Hey, Jeff, yeah, you can sketch out your question and snail mail it to me if you want to. Or you can attach it to a low-carb monster and I'll answer you promptly. Oh, a non-GMO grain, high yield. Okay. All right. That makes. All right, Jeff. We'll see you. See you later, Clint. All right, Shelly. We'll see you, man. Thanks for showing up.